Welcome to the deep dive. It's always fascinating how much insight you can glean from what might seem like pretty dry corporate documents.
Absolutely, especially for a name like Britannia Industries, something probably sitting in your kitchen right now.
Exactly. How much can a few official filings tell us? Well, that's what we're here to figure out today.
Hmm.
We're taking a deep dive into Britannia's recent announcements, specifically the financial results for Q1 of fiscal year 2026. That's the quarter ending June 30th, 2025.
And also a really significant update they made to their corporate governance framework, both landed on August 5th.
Right. So our sources today are straight from the horse's mouth, Britannia's official filings. We've got the unaudited financial results, both consolidated and standalone.
Yep. And the press release summarizing the highlights. Plus, that important amendment to their code for fair disclosure of unpublished price-sensitive information, or UPSI. Bit of mouthful.
It is, but we'll break it down. Our mission today is basically to pull out the key nuggets from all this. We want to help you understand not just the numbers.
But the strategy behind them, right? And the systems they have in place.
Exactly. We'll look at what drove their growth recently and how they're aiming for more transparency. Let's jump in.
Okay.
So first up, those Q1 financial highlights. The press release gives us the big picture right away. For the quarter ending June 30th, 2025, consolidated sales hit 4,535 crores.
Which is 45.35 billion rupees,
Yeah.
roughly half a billion US dollars, give or take.
And that's a pretty healthy 9.8% growth compared to last year.
Yeah, nearly double digits. That's strong.
But then you look at the net profit,
Yeah.
520 crores. That only grew 3% year on year.
Right, and that's the first interesting thing, isn't it? Sales up almost 10%, profit up only 3%. Makes you wonder about margins.
Definitely. What factors might be squeezing that profit growth? Let's dig into the detailed statements. Total revenue from operations for Q1 FY26 was 4,622.22 crores.
Okay, slightly higher than the sales figure, probably includes other operating income. That's up from 4,250.29 crores in Q1 last year, so the growth is confirmed there.
And the net profit for the period lines up with the press release 520.13 crores this quarter, compared to 504.88 crores last year.
So that 3% growth holds.
Yeah. And earnings per share, the EPS, also saw a small increase. Went from 20.99 last year to 21.62 this quarter.
Okay, so even with that modest profit bump, the EPS is still climbing. What does that tell us, really, for investors?
Well, it suggests they're managing shareholder value, right? Generating a bit more profit per share, even if overall profit growth isn't explosive.
Right. It's incremental but positive. And it's worth quickly noting the standalone numbers to the core company itself. Revenue around 4,453 crores, profit about 498 crores, gives you that slightly different perspective.
Good point. So what's actually driving these numbers? Varnberry, the exec VC, MD, and CEO, had some comments in the press release.
Always key to read the management commentary.
He talks about a focused execution strategy. Things like getting more value from existing shops, better servicing for key stores, making distribution more efficient.
So basically tightening the screws internally, optimizing operations, which for a huge consumer goods company is super important.
Yeah, and he specifically calls out robust double-digit growth in what they call 4 focus states.
Okay, so targeted geographic success, not just broad growth.
And also in adjacent bakery categories. Things like rusk, wafers, croissants.
Interesting. So they're pushing beyond just biscuits, diversifying within bakery. That makes sense.
Now, here's where it gets really interesting for me. Barry noted a marginal uptick in consumption in both urban and rural areas.
Okay.
And he links it partly to moderating inflation. Says this helped them go back to double-digit growth after the last few periods.
That's a crucial point. It immediately raises that question.
Yeah.
How much of this is Britannia's own doing, and how much is just the market environment getting a bit better?
Exactly. If inflation eases off, people have a bit more cash, they buy more biscuits, right?
Precisely. It's a potential tailwind for the whole sector, a key macroeconomic signal to watch.
They also talked up their journey of premiumization through innovations like new launches, the Pure Magic range, and these crafted cookies under Good Day.
Right. Premiumization. That's the buzzword.
Sounds fancy for cookies, but I guess it's about selling higher value products, not just more volume.
Exactly. And that often ties back to margins. If you can sell a slightly fancier biscuit for a better price, it helps profitability, especially when competition is fierce. It's about value over volume.
Makes sense. Looking at the costs quickly, cost of materials consumed was about 2,551 crores consolidated.
Okay, the biggest chunk of expenses, as you'd expect.
And employee benefits expense was around 242 crores.
Right, standard stuff. But connecting back to inflation, if raw material prices are indeed moderating, that Euro 2,551 crore figure for materials might see some relief going forward. Something to watch.
Good point. Now, here's a detail that helps clean up the year-on-year comparison. The financials mention an exceptional item expense back in Q1 of FY25.
Okay, a one-off cost.
Yeah, but it's not there in this latest quarter, Q1 FY26. Last year, it was about 24.6 crores.
And what was that for?
It was costs for a voluntary retirement scheme for their own workers and also some contract laborers.
Okay. That is really important for anyone comparing the profit numbers.
Why is that?
Because exceptional items, these one-offs, they can distort the picture. Last year's profit was lower because of that specific VRS cost. This year, without that cost.
The 3% profit growth we're seeing is actually a cleaner reflection of just their ongoing operations.
Exactly. It gives you a clear view of the underlying performance trend without that past specific hit. Makes that 3% perhaps look a bit healthier in context.
Got it. Okay, so moving beyond the financials, Britannia also flagged this amendment to their Code of Practices and Procedures for Fair Disclosure of Unpublished Price-Sensitive Information.
Right, the UPSI code. Sounds like corporate speak, but it's actually fundamental stuff.
How so?
Well, it's all about making sure sensitive info stuff that could move the share price isn't misused. It's about preventing insider trading, making sure news gets out fairly to everyone at the same time. It's mandated by SEBI, the regulator, but the detail here shows they're taking it seriously.
Okay. And they mentioned their CFO also acts as the Chief Investor Relations Officer, the CIRO.
Yep, common setup. That person is key.
Their job is to ensure timely, adequate, uniform, and universal dissemination of information. Big responsibility.
Huge. They oversee all the disclosures, make sure analysts aren't getting secret info, educate staff. They're the gatekeepers for sensitive news.
So how do they actually stop someone accidentally, or maybe not accidentally, leaking something important?
Well, the CRO has to sign off on releasing any UPSI. And the code says if something does slip out accidentally, the CRO has to jump in immediately and make that information public for everyone. It's a crucial control.
Okay. The code also talks about handling market rumors. Queries go to the CIRO, who checks with the MD CEO for a proper response.
Standard practice. Don't want random people commenting.
And for talking to analysts or big investors, only specific authorized people can share company info.
Right. And crucially, the CIRO is always meant to be in those meetings.
And they only share public info unless the sensitive stuff, the UPSI, is being released to the whole market at the exact same time.
Yeah, that simultaneous release is critical for fairness. It highlights that tricky balance companies walk, being informative but also keeping secrets safe until the right moment.
What if an analyst asks a tough question that touches on UPSI?
The policy says they should basically take note of the question and promise a response later, after considering it properly. And that response would likely be made public.
Makes sense. They even mentioned the CIRO can get transcripts or recordings of meetings.
Yeah, to avoid any he said, she said issues or misquoting. It's about having a clear record. Very thorough.
Now, this amended code adds a specific policy on determination of legitimate purpose. This explains when UPSI is allowed to be shared, even before it's public.
Ah, okay. Because sometimes you have to share sensitive info internally or with partners, right?
Exactly. It's for the ordinary course of business or on a need-to-know basis. They give examples.
Like what?
Like sharing info for investigations by SEBI or the tax authorities, or if a court orders it.
Right, legal obligations.
Or for things like due diligence in mergers or acquisitions, sharing with auditors, lawyers, maybe consultants involved in a deal.
Okay, so practical business needs. But that's crucial because anyone who receives UPSI for these legitimate purposes then becomes an insider themselves.
Ah, so they're then bound by the same rules, can't trade on that info.
Precisely. It creates this chain of responsibility.
Yeah.
You share it legitimately, but the recipient is now also under obligation. It extends the net.
Wow. And they have a whole process laid out for how to share it.
Like a checklist.
Pretty much.
Yeah.
Confirm it as UPSI, confirm the purpose is legitimate, identify who's getting it, notify them it's UPSI, get a confidentiality agreement signed.
That's thorough.
And get this, they maintain a database of everyone who receives UPSI for legitimate purposes. Includes their PAN number or other ID.
A database of insiders.
Yeah, and it has controls like time stamping and audit trails to stop tampering, and it gets audited every year.
Okay, that is a serious level of detail. It really signals a strong commitment to compliance, not just box ticking, but building a robust, traceable system.
Definitely seems that way. It ultimately benefits everyone in the market, fostering trust.
Yeah, absolutely. A level playing field is what you want.
So, wrapping up the outlook, Varun Berry said their focus remains on sustaining healthy growth while protecting margins.
The classic balancing act, especially, he notes, in a heightened competitive landscape.
How do you think they'll manage that? Growth versus margins.
It suggests continued focus on efficiency, like those operational improvements they mentioned, and that premiumization strategy getting more value per sale, not just chasing volume at any cost.
He also mentioned continued investment in brand building and innovation.
Essential for staying ahead in FMCG. Brand loyalty is huge.
And finally, he brought up their ESG framework: environment, social governance, anchored in people, growth, governance, and resources.
He framed it as central to building a business that's both sustainable and profitable.
And that's important, isn't it? It shows they're thinking beyond just the next quarter's numbers. Long-term value creation today involves ESG. It's not just financials anymore.
And that ties back nicely to the governance piece we just discussed, right? That detailed disclosure code is part of the G in ESG.
Exactly. It shows that governance isn't just a policy. It's integrated into how they see sustainable business.
One last technical point, their auditors, Walker Chandiok & Co. LLP, gave an unmodified review report.
Which basically means a clean bill of health on the financials they presented. No major issues flagged by the auditors. Adds credibility.
Okay, so pulling it all together, we've seen Britannia post pretty solid Q1 growth, navigating that tricky balance between sales and profit margins.
Driven by focus execution, some market improvement maybe, and that push towards premium products.
While at the same time, they've really doubled down on their governance framework, making their policies around sensitive information incredibly detailed and robust. Yeah, it's quite a comprehensive picture when you piece together the financials and these governance updates, performance and process.
So, the final thought for you listening. What does all this mean? This level of detail in financial reporting, this intense focus on corporate governance?
Does knowing this stuff, the systems, the controls, the strategy behind the numbers, change how you view a company like Britannia?
Yeah. Whether you're thinking about investing or maybe just reaching for that packet of Good Day cookies next time.
It's a reminder, I think, to always look a bit deeper, beyond the headlines.
Definitely. The real story, the true insights are often buried in the details. That's where you find what's really going on.